Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel. As we embark on another trading week, here again with one of our top-down analysis series where we look at different financial securities, and today I'm going to be looking at a currency pair NZDJPY. That's a New Zealand dollar paired against the Japanese yen. So I'm currently on the monthly time frame. As you all know, I do my top-down analysis using pure price action trading strategy. So on the monthly time frame, as is customary, we try to get our directional bias. In other words, where do we think the market is heading? And if we look at the general view of what the market has been doing for quite some time now, it will be very easy to say that the market went up, retraced to give us a higher low, it created a higher high, and it is currently retracing. Now, I say I'm currently retracing, but the question would now be, has it retraced enough to continue moving upwards, or will it still be coming downwards? Because why I'm asking that question and why we need to answer that is because if I'm to go by this general view of the market, I can include a trend line here. So that means this market has the liberty of coming all the way down to make a third touch of this trend line before thinking to continue upwards, or it might have as well retraced enough for it to now start moving upwards. Now, the only way we can know if this retracement is enough for it to start moving upwards, let me take this out, would be to include a Fibonacci retracement tool from the swing low to the swing high. And looking at this tool, for those that have been following me, I have what I call the Fibonacci retracement to golden zone, which is a zone between the 0.618 and 0.5 percent mark. Now, this zone, we can see that price is currently within the zone, and it's not just within the zone, price has been rejected from the zone. So that gives me the first indication that for my directional bias to be what? Upwards. Another thing is, if I'm to even remove this fib tool, having seen that yes, price has been rejected from the most important zone for me, from the two by the two. You can also see that price was also rejected from a very strong support level on the monthly time frame. And currently, if we zoom in, we can see that price just broke another support level and retraced into it. But since the beginning of the month, price has been moving upwards. So adding all this together, from the general overview to the Fibonacci retracement to golden zone, and as well as the strong support level from which price was rejected upwards, I can now conclude that my directional bias would be what? Bullish. Now, the next thing I get to do would be to go to the next lower time frame, which is the weekly time frame, where I try to get a structure of the market to work with. So on the weekly time frame, the question would now be, what structure is the market presenting before us that we can now work with? So if I'm to zoom in a bit and just look at what the market has been doing, I can say that the market made a low, which is now this trend we're seeing now is the retracement that we saw from the monthly time frame, this part of the chart. So the market made a low, it made a lower high, it came back down to make equal lows, which was like a double bottom. But this double bottom wasn't strong enough to break the neckline of the double bottom. In other words, it wasn't strong enough to push price upwards. Instead, it came down, stored a bit on the support level, finally broke through it to give us another higher low, rather another lower high, came back to make a lower low, pushed upwards to this initial support that now became a resistance zone was pushed down a bit and then broke the support. Now, what I want us to pay attention to here, remember we're looking for a structure of the market to work with on a weekly time frame. If we go to the line charts, we can see a clear inverse head and shoulder pattern. And of course, we know that an inverse head and shoulder pattern, especially when it occurs at a key zone, if it appears when the price of the market is bearish, then it is a strong indication that the bulls are about to take over the market, because this chart pattern is a strong bullish reversal chart pattern. So if I'm to go back to the candlestick pattern, I can now easily map this chart pattern out, where we would have the left shoulder, the head, and uh, the left shoulder, the head, and the right shoulder. And coincidentally, one of our strong support turned resistance zone ended up forming the neckline of this head and shoulder pattern. And we can see that the neckline has been broken and even being retested with price pushing upwards. So this again gives more credence to our initial take that the directional bias that we had from the monthly time frame is bullish. So what do we now do next? The next best thing to do would be to go to the next lower time frame, which is the daily time frame, to see the most recent trend of the market, from which we can now start looking for what our trading opportunities. So if I'm to zoom in, zoom out, I can go to the daily time frame. Now, you can see that our inverse head and shoulder pattern that we got from the weekly time frame becomes more clearer. So this is the right shoulder, the head, and the left shoulder. Of course, I've explained severally in my previous videos on how to trade the inverse head and shoulder pattern. So all we simply need to do is to wait for price to retest the neckline, and then we look for our buy opportunities. Also, I need to also explain that until this the left or the right shoulder rather is taken out, this chart pattern remains valid. So a lot of people might see price breaking below this neckline and they start entering sell trades. This is because the market makers simply want to use this to grab liquidity here for price to continue upwards. So long as this right shoulder is not taken out by price, then the chart pattern remains very, very valid. And as we can see, this hasn't been taken out. Instead, we can see price coming below the neckline and currently going back above the neckline, and it's trying to move upwards. So the next thing that we'll do will be to place another trend line here for the beginning of an upward trend. So now, having this in mind, we know clearly now that we're looking for buy opportunities. How do we do this? We can now go to the H4 time frame to see if we can get any entry immediately. So on the H4 time frame, we can see that the market is already heading upwards, and we even have an opportunity to add like an internal trend line here. So how do I take advantage of this setup that we have? How do I end up getting entry or jumping into it? We can see that price, if we had caught this trade while the price was still here, the market made like a double bottom on this key zone. We could have easily taken our trade from this base, from this support, but because the market has moved quite upwards, well, we can see that it's already creating higher highs, higher low, higher high, higher low. The market has currently made a new high on the H4 time frame. So all we need to do now to jump into this trade, because if you look at this, the market still has a whole lot of space to head upwards. So all we need to do now would be to simply wait for price to come back either into this trend line, or we include a Fibonacci retracement tool. This time to take to look for possible entry. So the fib tool, we draw a fib tool, we map up the golden zone, which coincidentally, as it does most of the time, aligns with a support, or it aligns with a support zone. So we have our fib tool. If you keep extending it, you see that it aligns with other rejection zones. So the next best thing now would be for us to jump into this trade, would be for us to wait for the retracement of price either into the zone. This might probably take a while. The price keeps coming, retracing gradually. So once it gets into the zone, we could then look out for maybe a candlestick pattern like a bullish engulfing candle, and then we can jump into this trade. So this is my simple analysis for this particular Forex currency pair, NZDJPY. So like I said, it's the beginning of another trading week. If you get to come across this video, you can compare the analysis with your own and see if it tallies. And if you're coming across this channel for the very first time, or you've been following this channel, you see that this analysis makes sense to you, it is only fair that you click on the like button and share for others to benefit from it as well. Like I mentioned from the beginning, this is a trading academy channel. If you're starting out your trading journey and you want us to help you hasten your footsteps in this long Forex journey, you can reach out to us via the contact details on my YouTube bio. So don't forget, like I had begged earlier, to hit on the subscribe button, like and share for others to see, as I wish you all another beautiful and fruitful trading week. Cheers and thanks a lot.